Hey all, welcome to ShareTreck. This is Sandeep back with another fundamental analysis, and we're going to try delivering in a very fast-paced, more interactive way. So let's get started. Welcome back, friendos. Today we're going to dive into a company that has been skyrocketing over the past year and is up over 1,000% annually. And it's not just any company, it's a company that was part of the Russell 2000 and just recently, over this past week, joined the S&P 500, which is pretty impressive. This company is ticker SMCI Super Microcomputer. It's a company that before all this hype, before it was going on, before the very impressive earnings, I was digging into and trying to find a bit more about for the last 2-3 weeks, about a month. So let's see how my perspective has shifted and how this company is doing today. First of all, what does SMCI do? It is a hardware company that deals with hardware. I got this from their annual report. It makes a whole bunch of these server racks and server space sort of hardware units that companies like NVIDIA and places that use NVIDIA, your Microsoft, your Amazons, that use those very delicious H100 chips that everyone wants, they supply to these wonderful companies. And NVIDIA really uses this. And because of that big boom in AI, their products have been very in demand. But that doesn't show the whole full story. If we were to just consider it makes server racks, it makes storage system switches, what else does it do? And why is this company in everyone's radar? Why is it a company in the S&P 500? If we're going to just look at the financials, it's pretty impressive. Revenue is up almost 40% of the year, whereas expenses are up only about 30% in the same time period. And that shows efficiency. It shows that it's contributing to margins and it's able to grow margins and grow revenue faster than expenses. If we're talking about cash, because cash is exceptionally important, and I always start by looking at the cash flow street. It has about a little over $700 million in cash and about $400 million in debt, which is a good thing. It's showing that the balance sheet is solid and the balance sheet risk is nicely balanced. And it isn't very big. So this company, SMCI, it doesn't have big balance sheet risk. It's got very nice growth where its revenue increases. It's got scalability where it's able to increase its revenue at a greater pace than it increases expenses. And which contributes to margin. So where does my concern lie in? My concern with SMCI Super Microcomputer is actually in future and valuations. SMCI has smaller profit margins, but it is running really, really highly because its net income grew immensely. And earnings per share in the quarter, although it is a massive 5.47, if we were to forecast forward and take a look at some of the revenue growth rates, they aren't as impressive as we'd like to get into. And going back onto the topic of cash, they do have cash, but if you take a look at their cash flow, I see a big negative 324 million in net cash used in operating activities, which after looking at some of those, breaking down where that money is used up, I found something where it was kind of alarming. And that net cash in operating activities was mainly because of substantial inventory buildup, costing them about almost $1 billion in inventory buildup. Moreover, their stock-based compensation has quadrupled, indicating that they have to get through that inventory. And if they don't, the company could really see some compression in those revenues. Moreover, they have financed a lot of their growth, which I did highlight with a debt. They do have enough money to take care of that debt, but they do have debt, and debt is great if you have increasing revenue, but if that story were to change, it's something to consider. Into the forecast, however, they have almost $1 billion of inventory, and that inventory is starting to increase. Their actual inventory, according to their little estimate, is close to 2.5, $2.6 billion if we were to consider the whole picture. And their business outlook, looking forward, in the third quarter is expected to hit $3.9 billion, which, if their inventory were to increase by this much, that is really alarming if they can't sell it that much. SMCI is a company which is primarily a server rack company. It does do a little infrastructure. It does do chips. It does do server racks, which are for the H100s. But here is the kicker. I talked before about this blue ocean strategy, which SMCI has appreciated quite a bit because they had this niche of being able to build servers in an industry that really needed it. The demand was there, and they were able to provide high quality server racks that all these companies using the H100s really, really need. And that brought up demand. It caused the company to order a lot of inventory and just balloon their revenue. However, blue ocean strategies only last so long. As they continue to excel at their niche, as the in a capitalist society, as the demand were to grow for this very unique product like server hardware, competition does inevitably grow. And we heard about a whole bunch of stories of plans for chip manufacturing from various players. Like we heard that Sam Altman, he is starting up a chip company. The CEO of SoftBank, Masayoshi's son, he is wanting to get into chips as well. And all of these players jumping into what is a very high revenue thing eventually leads to what I like to call commoditization, where everyone kind of does a lot of the same thing and the prices for that start to become much more normalized. And that's something which I started to think of and forecast for SMCI, Supermicrocomputer Hardware Company. But another really, really interesting and, in my opinion, alarming story was the idea of valuations. So my concerns were future and evaluations. Valuation-wise, the company SMCI, Supermicro, it jumped because a very reputable bank, Barclays, gave a super bullish price target in the future of almost $1,200. And this is before it got out of the S&P 500, and now it's trading at almost $1,200. That is actually and I did a little bit of math, close to a 32 times multiple of a 2025 forward EPS expected price to earnings. And I am questioning, can SMCI really achieve that kind of growth? And that's a big question. When we're assessing things like PE ratios, it's crucial to factor in things like growth rates. And taking a page out of Wall Street's book, Wall Street, they like to think ahead and price in things 6 to 9 months ahead of time. And the PE ratio for the end of 2024, if I were to project, is not as impressive in my eyes, which I will show in just a moment. And it raises a lot of questions about, is this growth sustainable? And is considering potential competition in the future really, really a thing? But rather than that, why don't I just show you what I have been talking about? So I am going to, this is just a little quick snapshot of a lot of SMCI Supermicrocomputers financials. You will see that their margin is around there in the 8 to 9% mark. However, I looked at some companies that also do hardware, things like HP and Dell, and those are their main competitors right now. This is actually pretty good margins for a hardware company. A lot of us are used to those huge margins that the software companies like NVIDIA and AWS are able to give us. This is hardware. Hardware is different. It has inventory costs. It has other costs, and those inventory costs that we brought up earlier. So this is actually very, very nice in terms of how super microcomputer is able to do. The margins are quite appealing. But there are positive and negatives that I have really considered. So I'm just going to pause this here. If you'd like to take a look, pause the screen. Otherwise, I'm going to go into what I believe is an important thing. SMCI currently has a price of, and I rounded a bit because it is a little higher than 1100, but I use 1100, which gives a end of the year forecast PE of according to Wall Street's estimate, about 21.7, which is pretty good. However, if we were to take a look at the forward PE, this is 50 PE. That's up there with other companies like Intel and other companies like, where was it? Amazon. However, it doesn't have, if I were to think of SMCI and think of Amazon, where Amazon has this massive advantage over its competitors, it's able to scale, it's able to be a loss leader, it's able to do so much because of the established brand and its power to influence. Amazon, I think, could justify a PE, whereas infant company, a rookie company like SMCI, I don't know if it can. So I used Wall Street's estimate of 23%. Even considering that, its PEG ratio 2.2, that is pretty high for a company that is just doing servers. And my doubt for this company, SMCI Supermicrocomputer, is I am doubtful that Barclays' very aggressive forward price target, I am doubtful that it's able to do that. I am doubtful because comparing to industry giants like NVIDIA, which if we were to think SMCI's growth projections, which Barclays is thinking of it growing at between 15 and 30, I know this is a very high, very large range, percent per year of revenue. If it were to do that, maybe this price target is justified, but I don't know if it can. The optimism might be a little high for me. And competition is coming. Competition always comes. NVIDIA, I expect them to be able, I expect the demand for some of these chips to decrease. SMCI has inventory. And if the demand decreases, I don't think that SMCI, Supermicrocomputer, is able to justify the valuation that it does. I am not saying that Supermicrocomputer is a bad company. It is scalable. It's able to grow. It's able to produce margin. It's able to grow its revenue and inventory. And it has cash. It's in a pretty good financial position compared to some other companies that we covered on the show. But I am doubtful on the future, and I am really questioning the valuations as it's trading exceptionally expensive right now. So do I like the company? It's okay. But do I see a big future in the company? I am not as bullish as Barclays. I think that when competition comes in, when folks like Sam Altman and other players, Dell, maybe HP, start doing what Supermicro is doing, the valuation is going to catch up to it. And valuations do matter, might not matter today, but eventually they do. But those are my thoughts on SMCI, super microcomputer. Very impressive performance. Beautiful story. Great story where it's a company that was able to get into the S&P 500 in just a short period of time, grow their margins, grow their revenue. But does the story end here? We are going to find out, and let's get through it together. But thank you for listening to me, everyone. Thank you for tuning in, and let me know what else you want to hear about in the future. And what do you think of SMCI? Did you ride the train from SMCI going from a couple $100 company to thousands of dollars company? If you did, let us know in the comments. Until next time, thank you for inviting us into your homes. Stay based, and we'll catch you in the next one. Bye, friendos.